Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. While I believe many of us are wondering if gold has hit its peak, it's still riding high. Despite some setbacks from the US economic data and the Fed's hawkish stance, the bullish drive isn't letting up, pushing gold to new all-time highs. Escalating geopolitical tensions and hefty central bank purchases are major factors driving recent price hikes, and traders are now keeping a close eye on tonight's US CPI release, which could shake things up. So looking at how gold against US dollar has been doing, it's been on the upswing for 6 out of the past 7 weeks. If we put it on a lower time frame, out of the last 11 trading days, gold closed higher on 10 of them. So I would say this bull market is real and seriously strong stuff. After breaking through the $2,300 mark last Wednesday, buyers keep pouring in, pushing prices above the $2,350 now, and the RSI is flashing serious overbought signals. If this climb keeps going, we might see a run at $2,400 without any obvious resistance markers on the chart. Well, if gold takes a dip, $2,300 could be the first line of defense, and if it breaks, buyers might step in around $2,200, where the March trading range topped out. So actually, like the deja vu from last week, strong non-farm payrolls, US PMIs, and that no rush to cut stance from the Fed are weighing on gold. But despite these hurdles, what's really powering gold's rise? Well, I would say people's appetite for safe haven assets due to geopolitical tensions and the anticipation of major central bank gold purchases are playing a bigger role. Well, there's talk of possible ceasefire deals between Israel and Hamas. Other conflict like the Ukraine situation could still flare up. Plus, with the de-dollarization trend gaining steam and policy shifts looming, the market is betting that global central banks will start hoarding gold later this year. Right now, PBOC has been buying gold for 17 straight months as of March, with total holdings of almost 73 million ounces, while Turkey, India, and a bunch of Eastern European countries have also been stocking up this year. The World Gold Council says global central banks have been buying more gold for 9 months in a row as of February. With this kind of expectation, traders might be loading up on gold in advance. And of course, speculative buying could always give gold prices a push. So overall, gold's upward momentum is still going strong. The demand for safe haven assets because of geopolitical issues, as well as the expectations of gold buying spree by central banks worldwide, are balancing out the negative impact of strong US economic data and Fed's hawkish tone, keeping gold on the rise. Well, as for the recent risk events, I believe tonight's March US CPI data is crucial. It will set the tone for Fed rate expectations and where gold's headed next. Market buzz is that core CPI might show a slight cool-off, with annual growth dropping from 3.8% to 3.7%, and the monthly growth easing from 0.4% to 0.3%. If core CPI surprises with a jump, it could make people think inflation's staying put, putting the brakes on the rate cuts and sending gold prices downward. Plus, we've got the Fed meeting minutes dropping today as well, and speeches from 9 Fed members this week. Any hints about when the easing cycle might start could give us some clues about gold's next move. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading.